I'm Jeffrey Nichols, and I conducted a feasibility study for Coastal Carolina University to determine if they should add seats to their football stadium in Conway, South Carolina. For this presentation, I will be going through the executive summary, introduction, market analysis, product description, key project assumptions, and the economic and fiscal impacts to determine if it's feasible for them to add seats to their stadium.
The left side of your screen shows you where the city of Conway is located within the state of South Carolina, while the right side of your screen is zoomed in on the city to show you the university's location. The area within the red circle is the area that was used for this study. 2017, Coastal Carolina's football team will be moving up to Division I FBS and joining the Sun Belt Conference. The NCAA requires that all Division I FBS schools have an average home attendance of at least 15,000. I wanted to compare that number to their 2016 season averages. And right now, Brooks Stadium currently has a capacity of 9,214, but only has an average home attendance of 8,393. Although the season high in 2016 was 10,311 and the stadium was over max capacity, it had a season low of 5,921. The team played as an independent after leaving the Big South Conference in 2015, so I thought that may have had an impact on their ticket sales. So I compared their 2016 numbers to 2015, which was very, very similar. In 2015, their average attendance was 8,819, and leaving the Big South Conference didn't seem to have an impact at all. During both of those seasons, attendance was at its highest early in the season and dropped off significantly during the second half of the season. The population of Conway, South Carolina was estimated to be around 17,000 at the end of 2016, and the university only had 10,479 students at the end of 2016, which means if the stadium did expand to 20,000 seats, it's very, very unlikely that the seats will be filled by local residents or students. Also, the 2016 average household income for Conway was only $39,189, which means the residents probably do not have any extra cash to spend on tickets. So for those seats to be filled, it would have to be people coming from outside areas to attend. However, the ticket prices for Coastal Carolina games are not that expensive compared to other schools in the Sun Belt Conference or in the state, with season tickets starting at $155. Using Turner construction data, we determined that if 10,000 seats are added to the Coastal Carolina University Stadium, that it would cost approximately $4,200 per seat, coming to a total of $42 million just to add the seats to the stadium. This price does include the engineering fees and labor costs to add the seats. A second deck will be added to the west side of the stadium, and additional seats will be added to the lower deck of the west side and the east side. A total of 8,000 new seats will be located on the upper deck of the west sideline, with 500 seats being added to the lower deck of the east side. The remaining 1,500 seats will be added to the east upper deck to cover the length of the sideline. There was no room to add seats to the south side of the stadium due to its close proximity to the University Boulevard. Along with the new upper deck seating on the west side of Brooks Stadium, fan amenities must be built as well. 2 separate male and 2 separate female bathrooms will be added to the west side. Also, 3 concession stands will be added to the new west upper deck as well. 1 merchandise store will be built on the west upper side and on the east upper side as well. Also on the east side, there will be one more male and one more female bathroom added. There will be another concession stand added to the east side, and the total construction and engineering cost of these new fan amenities will be approximately $5 million, coming to a total cost of $40 million for the stadium expansion. Coastal Carolina University was approved for a $30 million loan that will be repaid in 15 years at 8% interest to help pay for the expansion. Also to help pay for the expansion, donations will be made to the Chanticleer Athletic Foundation. The Chanticleer Athletic Foundation will require donors to sign a contract once they agree to make donations to the project. The purpose of the contract is to ensure the university receives the funds once they are promised by the donor. With the addition of 10,000 more seats to the stadium, there is an opportunity to create more revenue from ticket sales for Coastal Carolina. Also, since Coastal Carolina will be moving up to Division I FBS, they will be able to participate in conference revenue sharing. And under the new college football playoff system, the Sun Belt Conference receives $1 million to share amongst its 12 members, and that 12 includes Coastal Carolina. Also, with more seats being built, more fans will be able to come to the stadium, which means more cars will be there, and the university will have more cars parked, which they charge for, and that will also be a new source of revenue. If Coastal Carolina University does expand its stadium, it will create jobs for the local community. The construction of the expansion will likely be completed by a local construction company, generating money for them. Also, once the expansion is completed, the university will have to hire more people to fill the new positions made available. There will be new jobs for ushers and ticket booth personnel, as long as people to work in the concession stands and the merchandise stores. With the school's athletics moving to a bigger conference, more fans from opposing teams are expected to travel to the area, resulting in more money being spent in the community. This will help bring more money to the local economy that already depends on tourism. First financial statement we have for Coastal Carolina's football program is the balance sheet, which covers years 2017 through 2021. In the assets section, you can see that their cash is going to continue to increase each and every year. In the property, plants, and equipment section, you can see that they will add $500 of equipment each year. For the depreciation, we use the straight line model with the stadium having a useful life of 20 years and equipment having a useful life of 5 years. In the liabilities and owner's equity section, you can see the current installment of long-term debt of them repaying the loan back, and the accounts payable stays steady at $100,000 each year. The long-term debt shows the remaining balance on the loan they have. The owner's equity section shows the retained earnings each year they have from the revenues. The second financial statement we have is the income statement, which also covers the years 2017 through 2021. In the revenue section, you can see that we have separate lines for the season tickets and the walk-up ticket sales, which we hope to remain steady. We also have the conference revenue sharing line right here that was mentioned above, with $1 million divided by 12 teams in the conference. In the operating expenses section, we expect the salaries, utilities, maintenance, and the scholarships to remain steady for the next 5 years. Down here at the bottom, we have the earnings before the interest expense, and then we have the interest expense paid on the loan. We also have the tax expense, which I use the 10% tax. And each year the net income increases by a decent margin. Here we have our cash T account for the year 2017, which shows how we get our beginning cash balance on the balance sheet. We have our revenues and our accounts payable, the loan, and the paid-in capital on the debit side, which comes to a total of $50,073,333. On the credit side, we have equipment, building, long-term debt, accounts receivable, operating expenses, the interest expense, the tax expense, and the depreciation, which comes to a total of $48,166,061, which gives us a cash balance of $1,907,273 for year one. Here are the cash flow statements that show how we get our cash values for the 4 following years of the 2017. In the operating sections, we have our net income, depreciation, and the accounts receivable, along with the current installments of long-term debt. In the investing section, we see that we have Coastal Carolina's purchased $500 of equipment each year. In the financing section, it shows the long-term debt. Here is the loan amortization schedule, which is how we get our interest payments and principal payments to pay back our loan. You see we have a $3,504,886 payment due each year, with the loan being paid back in 15 years.